Today's Animal Spirits is brought to you by our friends at YCharts. Michael, financial advisors, people in the wealth management world, are very busy. You have stuff you have to do all day operationally. You have to tax stuff. You have insurance stuff, estate planning. Then you got the
Golf.
portfolios. Yep, golf, client meetings. There's a lot of stuff to go. So that's why YCharts has the portfolio comparison tool, which basically, if you have a prospect come to you, take their current portfolio, drop it in the portfolio comparison tool, compare it to what your proposed portfolio would be. Then now we're talking, right?
Now we're cooking with gas.
We need something tangible here. So
You know what I use on YCharts every single day? Dial it right up. I've got my own dashboard. Now, I'm not going to share what's on it because it's proprietary to me, but I've got one. This, that, the other thing. You have your own
it's not
dashboard?
proprietary to you. I'm pretty sure they created the same one for both of us.
No.
Proprietary to us.
No, to me. You don't have my dashboard. They have the out of the box, whatever their standard dashboards are. I made my own.
Oh, okay. I'm impressed.
You probably use a generic dashboard. What do you have in your dashboard? A 60/40? A target date fund?
YCharts created it for me.
Exactly. I rest my case.
It's a target date of dashboards. All right. Check out YCharts reporting and proposal tools. You can enhance your workflow, ramp up your efficiency, faster AUM growth, 20% off your initial subscription when you come through Animal Spirits. Tell them Animal Spirits sent you. First subscription, 20% off. Link in the show notes.
Welcome to Animal Spirits with Michael and Ben. You know what's coming up? Just fall is around the corner, and that means future-proof. We just announced the FinTech demo. This is an opportunity for 7 companies. How much time do they get? Enough. 7 minutes? 7 companies to demo in front of an audience of real buyers. There's no better place in the world to showcase your stuff if you have a piece of software or a service that you want to get in front of financial advisors. Hit the link in the show notes, description, et cetera, et cetera. Well, look forward to seeing you there.
It's very cool. I ran into an old friend from high school this week. We had a boys' weekend and haven't seen this person in 20 years probably, and in the RIA business. And he said, so I was talking to my partner. They run a small lifestyle kind of practice.
Mm-hmm.
And he said, we go to one event a year. And my partner pitched me this event in California on the beach. And I said, oh, I know this event. We helped throw this event. And I gave him a quick 5-minute, spiel about it and right? It doesn't take much to
the
get
best.
people. Yes, it really is. And we announced a musical act too for Future Proof.
Somebody, who was I talking to the other day? Somebody goes, dude, you guys got 3 blind eyes? It's awesome.
Close.
We got Third Eye Blind.
Third Eye Blind. I've had semi-charmed kind of life in my head ever since. So
yeah, I've been playing the hits.
We've been huge on 90s nostalgia lately, and that is going to hit. Everyone's going to know all those songs.
Yeah.
At least in our middle-age demo.
Yeah.
That'll be fun. Okay. Good piece from The Economist, Mike Bird. American stocks are consuming the rest of the world. Some stats for you. By 2008, America had entered a recession and its financial crisis were underway. The country's stocks accounted for less than 40% of the world's total market capitalization. It now stands at 61%. And he said that's pretty astonishing considering that we make up 25% of GDP. It is kind of crazy when you think about that. He did say, though, in the 1950s and 60s, it was closer to 70% for the U.S. So these things are cyclical. And Japan, by 1989, accounted for 40%.
Whoa. However, what percentage of corporate profits do we have?
No, that's a good question.
Definitely higher than that.
Here's an interesting one to me, though. He talked about Japan's bubble. In 1989, the 4 largest companies by market cap were all Japanese banks, which is just insane to think about. I mean, ours are tech stocks, and that almost makes sense. But think about 4 banks being the biggest stocks in the world. Different world. Okay. So everyone's ready to give up on U.S. markets. This is interesting. JP Morgan guided the markets. I was perusing through this recently. I think they update it on a daily basis sometimes. They also have the quarterly ones. But they looked at year-to-date returns, and they looked at U.S. and ex-US and IFA and Europe and all these places. And check out the ACWI World ex-US in local currency versus USD for 2024. Now, it kind of reversed a little bit from 2023, but it's 11% in local currency. So if you're an international investor in foreign stocks, you're earning over 10% this year. But if you're a US investor in international stocks, it's 6%. So that difference comes from the dollar being strong this year. So last week I talked about a bunch of problems in Europe, but we went through all those charts. And I think my conclusion after thinking about the show was basically maybe that was a contrarian signal to just buy Europe because everyone just hates it. But isn't the simple explanation for the international stocks eventually outperforming just the dollar weakens finally?
That's one of them. Sure.
That's the simple one. I guess especially for U.S. investors.
Another one. Josh and I are going to talk about this tonight on What Are Your Thoughts? Drew Dixon had a post showing that actually international growth stocks don't trade really at a big discount to U.S. growth stocks. And I saw a chart floating around this morning from Goldman Sachs showing that the granola stocks in Europe, which is GlaxoSmithKline, Roche, ASML, Nestle, Novartis, Novo Nordisk,
Wait, why do you call
L'Oreal.
them the granola stocks?
That's what they're called. Keep up.
Oh,
That's their
that's
Mag
their
7.
acronym?
Yeah.
Okay.
They're responsible for like
I thought you were talking about like hippie stocks or something.
No.
ESG maybe. Okay.
No, they're also responsible for like 70 to 80% of the returns overseas. So anyway, the point is that Europe has way more value. The index is way more value oriented. The cap weighted index is way more value oriented.
Which makes sense why international stocks have underperformed then. It's a sector thing.
It's not that complicated.
So this is the whole thing about big stocks being so concentrated. This was another interesting one from the Guide to the Markets. They looked at the number of S&P stocks that ended the year down 5% or more every year since 1994. So on average, 151 stocks finished the year down 5% or worse, regardless of how the market's doing. And obviously in the bad years, 2008, 2018, 2022, there's way more stocks. But even last year, it was almost 130 stocks. In a year that the S&P was up 26%, 130 stocks were down 5% or more. This gets to the point of why many portfolio managers would be tooting the bearish horn more often, because if they're picking stocks and not tracking the index exactly,
it seems to be it's not fair.
It's not.
In the first half of the year, the S&P was up 14.5%. Nvidia contributed 4.4% of that. So if you just take out Nvidia, Microsoft, Google, Amazon, and Meta, the other 495 stocks had a 5.7% return, which actually is not bad for the first half of the year. So the index was up 14.5%. If you take out these five winners, it was up 5.7%. That's not so bad. It's just that if you're trying to keep up with the index, it's terrible.
It is kind of crazy that the case for indexing has only become stronger over the years. It hasn't weakened at all. There hasn't been a period over the past, I don't know, call it 15 to 20 years where you could have said like, indexing, what's going on? Because you have the period like the 70s where active management actually worked, did much better. We haven't had that in a long, long time.
Yeah.
Stock pickers market is coming. Just wait.
It's not fun anymore. I feel bad. Genuinely.
Beating the market is hard. That's
it's always hard, but now it's impossible. It's impossible. You cannot beat the market with Nvidia doing this. You just can't. There's no way.
Yes.
There's no way to do it.
It is true.
So
I feel like everyone has given up on everything else besides tech or market cap. There's going to be a time where anything other than market cap is going to work.
Yeah, everything has its day. Ben, we got an email. What's happening with mega brands? I was wondering what you guys make of all the big name stocks getting crushed these days, such as Starbucks, CVS, Walgreens, Disney, Nike. Maybe I'm cherry picking, but it seems all these stocks that have had a bid for years based off never making a wrong move and having a premium attached to the brand. My thinking is now that there have been execution missteps. He goes on, yeah, I think that's it. I think COVID shook the world up, and a lot of these companies were cruising off the backs of inflation, right? It was just very easy to raise prices and stuff, and now we're on the side of that, and there has been missteps. Nike famously completely missed somehow with the running revolution. The other brands, right? On Cloud, is it Hoka? Starbucks disaster, just continued to raise prices. It is interesting though.
I suppose is it too simple to say complacency? There's some leadership changes. Obviously, the Disney thing. I think Disney had the right idea and the wrong execution. But remember how excited people were when they had so many subs sign up for Disney Plus.
I don't think Disney Plus hurt the stock. I think it's just the quality of the content. just fell off a
And the
cliff.
spending and
They overdid it. They just completely overdid it with the Marvel Cinematic Universe and Star Wars. I mean, that was it. It wasn't that Disney Plus didn't work. It's obviously the cable component of it is hurting big time.
maybe the positive spin here is that this is a good thing. It seems like the tech stocks are untouchable, but a lot of these huge big names have shown that they can have missteps and there's room for competition.
Yeah, no, it is interesting though. I was thinking the same thing, that like big consumer brand retail names that are household, right? Disney, Nike, just getting demolished.
I suppose a lot of these companies too, it's just much harder to run as efficiently as a tech company. I guess that just shows the built-in advantage a lot of the tech companies have, that these places have more physical locations. They have more products to make. They're more to do than they do at tech companies. Is that fair? It can't scale as well.
Yeah. Nike is just not growing. The company was they grew 1% in the latest quarter.
We're doing our part of the Carlson household. We're still a Nike family.
Same. But the earnings call was really, it was just sentences of buzzwords, and it was just complete corporate speak. Like you could tell that it was like polished up by their, the PR comms people.
So you didn't wear the middle-aged dad shoes when you did your run through Central Park, the Hoka or On Called?
No, I wore a pair of Asics that I bought at least 10 years ago.
Okay.
And I think, yeah.
Remember like the Saucony? I don't know if I'm saying it right.
Yeah. I think I think it still exists.
Okay. Someone will send us an email saying I mispronounce it, because we get a lot of mispronunciation emails, which, hey.
Oh, the tarot one, tarot card. Apparently it's tarot. I've never said the word tarot out loud in my life.
No, we got some good ribbing on that one.
All right, here's another email. I would love to hear why and how Batnick uses credit spreads. I've heard him say if he could only use one indicator, he would use that.
Is that true?
Yeah,
is that your desert island indicator? Credit spreads?
What I meant by that was if I could only see one indicator to tell me like the health of the economy and the markets, I would use credit spreads. Is that fair?
As far as, I think that is fair. So
I guess like the stock market can often be disconnected like in a big way from the overall economy. I think that the stock market for the last year and a half, certainly right now, is outperforming the economy. Is that fair? Like the stock market's grown at what, 18% annualized over the last 3 years. I mean, it's some sort of crazy number. It's way outpacing the economy. And credit spreads is just different.
So all the other signals that people were looking at to try to figure out if there was a recession, credit spreads never blinked. So right. I guess if you say that, if you followed credit spreads and credit spreads only this time, yeah, it made sense. It did not blow out.
So for people that are unfamiliar, a credit spread is just the difference in interest rates that bonds trade at of various companies versus risk-free bonds. And that's it. Those are the hips. Those are the hips that don't lie. Credit spreads.
Right. And we had a good Talk Your Book with Ben Santinelli from Poland Capital about this. It's going to come out next week. That was, I think, pretty instructive on this and how they use it as fixed income managers.
Anyway, a timely question because Sentiment Trader tweeted, watch credit spreads. The spread between the weakest and strongest investment grade credits bottomed nearly 2 months ago. Credit concerns are rising even as stocks hit record highs. This is unusual and was last seen in late 2011. So again, a divergence between the stock market and credit spreads. Now, they're coming off ridiculously low levels. So maybe it's nothing, but maybe it's something. Ben, you saw the Atlanta Fed GDP took their forecast down pretty dramatically on GDP.
Everything has to start somewhere, right? Yeah. I'm going to get this later, but the unemployment rate, if you look at the chart of unemployment rate, every time it started to go up in history, it doesn't just stop going up. There's never been an instance where in the last 100 years or so where unemployment rate starts going up and then just stops and flattens out, that it's almost always led to a recession. Now, you could have said the same thing. I did a chart that was similar a couple of years ago saying we've never had inflation over 5% that hasn't been the way that you get it down is through a recession. So that was a never happened before and it didn't. So maybe unemployment rate is the same thing, but that's never happened before when unemployment starts going up and doesn't stop.
Did you just call for a recession?
Nope, but I guess things are slowing.
Yeah.
I think that's fair to say.
And yet Powell's speaking right now. And I saw a quote, because we keep arguing, like, why is he not Why is he not cutting rates if the economy is in fact slowing, if inflation is cooling? What is he waiting for? And the quote was something like, oh damn, what was the quote? The TLDR was like, they don't want to be too early.
Yeah.
I guess they'd rather be late.
Which seems to be their MO most of the time for almost everything. So I listened to your podcast with the two Jeremys, Siegel and Schwartz, last week, and he was railing on the Fed. But there was the interesting thing that you guys talked about, I thought, was the 70s. And he was saying how crazy it was that stocks in the US got down to like 7 or 8 times earnings, like the overall market. And it makes sense in lieu of not only inflation, but rates getting so high, right? You could earn 12% in money markets or whatever it was, or bonds. But I think another reason is we didn't have the structure in place that we have today. So the Wall Street Journal had this piece about savings rates for 401ks. And I think the advent of the 401k IRA in the late 70s, early 80s was a huge sea change in the stock market valuations. You never say never with these things, but I don't see how, with the amount of automation we have, that we could ever get back to levels of valuations like that. So they say now nearly a third of companies that use automatic 401k enrollment now start workers at saving 6% of their salaries or higher, about double the share of organizations that did so a decade ago, according to Vanguard. And they look at, I guess for some reason, 3% used to be the number. If we're going to automatically enroll you, 3% is your savings rate. That has decreased from 50% to 40%. The plans that use 6% of their paycheck or more have gone from 15% to 30%. So it's just saying that they're figuring out this automation stuff, and it's like, why don't we bump people up higher? And also put them in target date funds and all this stuff. And they're saying 60% of companies automatically enroll new hires, and participation rates are over 80%. Last year, Vanguard people in 401ks, which is like 5 million participants, saved 12% of their pay almost. 91% of Verizon's 68,000 participants are saving 6% or more and receive the full match, up from 78% in 2020 before the switch. So these companies are saying, we're not forcing people to save, but we're going to make them turn it off. And so I just think that this type of sea change that we've seen with automatic investment and constant money coming in from 401k and IRAs, which is, I think the combined for 401k and IRAs is $20 trillion now or something. That had to change the way valuations work in the stock market.
Oh, it changed everything. Absolutely. It accelerated. It changed everything.
Yeah. It doesn't mean it props up the stock market forever and valuations can't decline, but I do think that's a big difference between now and the 70s, is that there wasn't this level of automation and professionalization in the stock market.
But just permanent buying. It's
Yes.
not the only thing that's responsible for higher valuations, structurally higher valuations, but it's certainly a big factor.
All right, back to your recession thing. I pulled a bunch of charts here that I saw this
week. What do you mean my recession thing?
Well, just the recession thing that we brought up. And I pulled a bunch of charts here. Some of them we've talked about before, some of them we haven't. And just wanted to run through these real quick and then get your take on this. So Torsten Slok, this one that's pretty similar to Ned Davis a couple weeks ago. Household net worth as a percentage of disposable personal income, close to all-time highs and way higher than it was in the past.
I feel like charts like this, like, they're good, and I'm not hand-waving them away. But when the top 1% have such a large portion of the overall net worth, I kind of feel like you really need to dig inside of this. You know what I mean?
That's fair. Yes. Which we've done before.
Yeah.
Jeremy Horpedal did millennial wealth relative to Gen X and boomers. So, and he did it by decile. And you can see the top 10% has way more than baby boomers had, or Gen X, right? So they have 239% more. So this is like, how much more do they have than their predecessor? So if it's 122%, they have 22% more. Makes sense? If it was 100% even.
So millennials are way richer than baby boomers were at the same time.
Yes. And he did it across the decile to show, and yes, the richest millennials are way richer, but
I mean, you know what people say that like
deciles.
Our parents were able to buy a house on one salary and pay for 2 cars, and I'm not saying like, yeah, but we have iPhones, but we really do. We have so much more shit than they did. We have so much more disposable income than they did. So many more luxuries than our parents did.
Yes. And a lot of those luxuries have become necessities, unfortunately. And I think that's part of the problem, is that just so many more vacations than our parents did. I never took a
airplane vacation. Well, we went to see my parents and my grandparents in Florida, but we never like went to the Bahamas. Like that wasn't a thing that
No,
we did growing up. Like our parents just didn't have
no.
money for that. And I think that like that's yeah, there was kids with whose parents did have a lot of money, but that was like sort of not the outlier, but you really had to have money to go and to take a family of 4 on a vacation.
You
Like
know,
money.
something we did that doesn't happen anymore is we would drive to Florida straight from Michigan to Florida. We're talking like 22-hour drive or something, depending on where you're going. And we would literally sleep on the floor in like a minivan.
And if a listener's like, oh well, it's only rich people going on vacation now, it's just not true. Um, Kyla tweeted this.
Hang on, I got this in surveys.
All right, go ahead. Oh, there it is.
Yeah, so I put this in surveys, and I don't know if I can trust this survey fully, but it said this vacation place did a survey, and they said an impressive 82% of adults in the United States, more than 212 million people are planning to travel this summer. Among these travelers, 42% plan to embark on multiple trips.
Which part do you not believe? Do you not believe it because of the source?
No, that just seems like an insane. I know people are richer than ever these days, but do we really think that 212 million people, that many people can afford to go on trips?
Well, look at what the cruises are saying, what the airlines are saying. They're all saying records. It's not only rich people.
Yeah, I guess that is just an insanely high number.
I agree. I don't know if 82% is the right number. That sounds high, but whatever.
But it's high.
It's high. It's record numbers, all-time highs.
Okay, so my question to you for all this, all the wealth stuff we've been talking about, the problem is it doesn't necessarily stop us from having a recession. To your point, if all that wealth is concentrated in the hands of the top 10% or top 20% or whatever it is, it's not like that money can stop things if we get an AI bubble that takes us to excess and the economy starts slowing, or even if it's something else. So that wealth doesn't necessarily stop us from having a recession.
True, and this can continue sort of in the face of a recession. Probably not to this extent. Obviously, the economy will slow down by definition, but we don't have to have a catastrophic recession. I think every time we talk about this, you think like stocks fall 50% and unemployment goes to 10%. It doesn't have to be that way.
Right.
You could have a recession where unemployment gets to 5.5%, 6%. Stocks fall because that's what they do. But it doesn't have to be the end of the world. It doesn't have to be a crisis.
Yeah. And like the 2001 recession is a perfect example of that. It was a tiny, tiny recession. The problem is the stock market was so overvalued, it almost had to crash. And it did so whether the recession hit or not, probably. It was going to happen regardless. All right. Good run of charts here from the American Worker, or the Economic Innovation Group. They did this whole history of American worker. I wanted to run through some of these with you. The U.S. labor force was 60 million people in 1950. It's now close to 170 million. And they show the majority of that increase is from women. So the labor force, prime age labor force participation ratio, which is 25 to 54, for women in the 1950s was 45%. Now it's close to 80%. Men is closer to 90%. That is an insane run up. And if you look at the next one, a lot of people say, well, it's because you need 2-income households to afford all the luxuries we were talking about. But really, it's because wages are so much higher that it is induced women to enter the workforce because they're being paid to. But look at this.
Well, both things are true. It is very difficult to raise a family on one household. To have all of these luxuries that we're talking about on one household is pretty rare.
Yes. But I think it's interesting. The reasoning that a lot of women have entered the workforce is not just because they needed to, it's because wages have got them off the sideline, essentially. But look at this next one. So they looked at real wages from the post-World War II era to now. And post-World War II was a huge boom in wages. But then from 1970 to 1995-ish, real wages went nowhere. And a lot of that is because inflation was so high. But it's kind of crazy that we look at the 1980s and 1990s as this period of just like jubilation and everything was great and the economy was booming. Real wages literally went nowhere for 20 years. And now from the mid 1990s to now, you've seen boom times again in wages. But you don't ever think about the 70s. There's obviously people have really bad memories, but the 80s and 90s, you wouldn't think this, would you? Is that surprising to you? It was surprising to me to see it charted out like this.
Yes, very surprising.
You don't hear pieces of economic reporting in the 1980s and 1990s of people being so miserable because their wages were going nowhere. Maybe it's just because the 70s were over and they were happy with that period being gone.
Well, also the stock market was booming.
Yeah, that's true. But now we have stock market boom and wages booming. People are still miserable.
Well, wages aren't booming.
Yeah, but on a relative basis compared to then, they are
Yeah.
now. Yeah, you're right. Fair. All right, one more from J.P. Morgan. Do you remember when, was it Meredith Whitney who said all the municipalities are going to go out of business?
Yes.
I think Michael Lewis had a chapter in one of his books about this.
That was a tough call.
So they did this. I've never seen this chart before. It's state and local and federal net debt as a percentage of GDP since 1930. So obviously, federal net debt as a percentage of GDP is about as high as it was in World War II. But look at state and local debt. It's essentially unchanged over the past, I don't know, 80 years, and it's only gone down in recent years.
I guess if you were to zoom in on on when she made the call, it was definitely
the peak of it, maybe.
It was
it's gone
definitely
down since she made the call.
It was going the wrong direction. So
yeah. Anyway, another surprising chart.
All right, Duncan threw a survey or a vote in our YouTube channel. Where have you noticed inflation the most in your life? Recreation, energy, cars and trucks, and food and beverage. And the number one item was food and beverage. And
By far,
I would also vote for food and beverage. But I think one of the reasons why we do vote for food and beverage is because you eat and you drink several times a day. Probably the most frequent purchase that you have, right?
Yeah, the funny thing is the actual inflation rate is probably way higher for cars and trucks and recreation.
Oh, I don't know about that.
Than food and you don't think so? Entertainment and
food inflation, it is up a lot.
No, if you look at it, it's pretty close to CPI.
Is it? Okay. All right.
I mean, restaurants are higher, but food at home it's higher.
Either way. I was telling this on TCAF. I got 2 slices of pizza and 2 sodas. And it was $17. And that's just hard to get used to. I'm not sure what I think it should be. 2 slices should be, what should 2 slices be?
I feel like this is turning into a weekly Michael Batnick segment of here's 6 things I bought. Here's how much they cost.
2 slices bad. 2 slices should be, let's say $4 each. Is that fair?
Are we talking big New York slices?
I mean, but it's we're down in the city. I was with my kids. Okay. So let's say $4 and $3. So 8, 14 taxi. I guess it makes sense. All right. It didn't feel good.
The thing about inflation, though, and so much of the food thing is the psychological component because, you're saying, you see it all the time. So you've seen this McDonald's meal deal making its way around. Pretty good deal, actually. So $5. It says limited time offer, but you get a McDouble or a McChicken, a 4-piece nugget, a small fry, and a small soft drink. Pretty good deal. It's funny to me that people would, and this totally makes sense. People don't want to look at the inflation data. They want to see stuff like this. They want to see a psychological moment like this where it's yes, this is it. You broke inflation's back.
I had my kids' chicken nuggets last night. Logan only eats a few. Man, they're so good. I don't know. I mean, they're so good that you just know that they're so dangerous. You know what I mean? Food should not taste that good.
Wait, you mean chicken's not actually shaped in a little rectangle like that?
Just the coating of fried whatever. It's so delicious. I was at a bar the other day, and some of the old people were laughing and complaining about McDonald's. They said, you take a family of 4 and it's $80. That's obviously not true.
Right.
That's not even close to true. But nevertheless, it's directionally.
McDonald's is relative. If you get but for the stuff my kids eat, it's still relatively inexpensive. My kids get a plain hamburger.
A plain hamburger.
Plain. Well, ketchup, I guess.
Okay.
They don't even like the little mini onions from McDonald's, which I contend are pretty good onions.
I love those mini onions. I love everything about McDonald's.
Yeah, McDonald's is great. All right, here's another anecdote from an email. Hey guys, love the show. I'm a police officer in SoCal, so I eat out a lot. Which I didn't know if that insinuation that police officers eat out a lot. I guess it makes sense. They're patrolling. Over the last month or two, nobody is at line in the drive-thru at In-N-Out. I sat alone inside a Chipotle the other day, which has never happened. The $20 minimum wage in Cali has increased prices to a ridiculous amount and has forced a lot of people to brown bag it to work.
Yeah.
I'm curious how this plays out for stocks like Chipotle and saying people are cutting back. And I think California probably is in its own little world on this, but it does make sense that these places have pushed to the Starbucks point, pushed enough. So this is interesting to me, though. I looked at Chipotle. That stock trades for 61 times earnings. The price to sales went from 2 times in 2018 to 8 now. How is this stock still being priced as such an insane growth stock?
I doubt their growth has accelerated. Has it? I don't know.
That I don't know, unless it's just all from price changes. That just seems. I'd be willing to take that as a paper short. How's that? I mean, you stopped eating them.
I actually had it recently, and I got to be honest, it was delicious. It was really good.
It's still pretty good.
It
All
was
right,
really
want to read
good.
this next one? We got. I guess this is a heavy. This is a holiday week. It's a heavy email week.
Oh wait, yeah, Chipotle in California. What do you think it costs? $16 for a bowl? No fucking way. Absolutely not.
Yeah. It's the Jeremy Irons thing.
So
willing buyers at a willing price.
My wife is home for the summer. I hear her. She's a guidance counselor, so she's off for the summer, and I just hear the TV on downstairs. A lot of TV for her. A lot of binging. She's mad. So my wife is very lenient with me. She's an incredibly understanding, very forgivable wife. So I usually don't get in trouble. I'm in the doghouse this week. In the doghouse.
Any reason, or
oh yeah,
care to
reason.
share?
No, I'll share. I shaved Kobe's head.
Like a buzz?
Yeah, without telling her.
Oh, okay. He had like long hair too, right?
I just made the decision because he has like so much hair and it's like hot and he's always sweaty. And so I told him that I would buy him.
Okay, you deserve to be in the dog. My wife would kill me if I did that.
Oh, we came downstairs and she's
how does he look? Did it turn out okay? You just wanted him to be like you.
I think
you wanted to see what you showed him he's gonna look like when he's older.
I think he looks cute, but I'm biased to protect myself from admitting that he might not look that good.
Oh no,
he looks pretty good.
Okay.
As I'm doing it, he goes, "Mom is going to be so mad at you."
At least he didn't care.
All right, what else?
Yeah, you deserve to be in the doghouse.
Yeah, I live in the Quad Cities between Iowa and Illinois, and we have the HQ of John Deere. Oh, this is an answer to what were we talking about last week? Oh, how
why grocery prices are so much lower in the U.S. than the rest of the world.
Right. Okay. So this is a great email. Here we go. Food prices are so phenomenally cheap here, and we are able to eat things like beef when other countries can't afford it because of our incredibly well-placed food basket. The Mississippi River Basin is basically the largest navigable river basin by far, extremely long and extremely flat, no rapids. And that river basin sits on the largest contiguous stretch of arable farmland on the planet. It produces 1/3 of the entire world's corn and soybeans, which are the foods required to raise livestock. Hell yeah. And all of it is controlled deep within the USA and is half a planet away from any possible foreign adversary. It's pretty great to be an American, I'd say. So there you go.
Coming from a person in a farm family, I like that. That makes sense. Also, I looked it up. Could you name any of the Quad cities?
No disrespect, but a Quad city. Where does he say he lives?
No, the Quad cities. It's like
between
Illinois,
Iowa, and Illinois. Let's see. Champaign?
I would not have gotten any of these.
Champaign?
It's Rock Island and Moline in Illinois and Davenport and Bettendorf in Iowa. That's the Quad cities.
Okay, I haven't heard of one of them, but they sound lovely. And thank you for the beef.
Kind of feels like that all makes sense. It's just that we have this abundance of natural resources here. So in waterways, and that makes sense.
Oh, here's a good one. We should have done this a minute ago.
Oh, okay. I did see this. A bunch of people tagged us on this tweet.
There's a Wells Fargo analyst who ordered the same burrito bowl 75 times. Now that's channel checking. Wow, credit to him. At 8 different Chipotles in New York City to prove the portion size and consistency. So this guy went around with a scale, a digital scale, do you think? Like a drug dealer?
I guess so. Bowl, yeah.
All right, so the bowl weight ranges from, the median is around 22 ounces, but it goes all the way up to 27 ounces. I got to know which store that is. And all the way down to 14. That is quite inconsistent.
I love how on the chart he put a 3 standard deviation event for the lowest one.
But you know what's interesting? If you are unlucky to get a bowl of that size, you're not getting Chipotle ever again.
No.
Right?
Yeah. The person who does the little half. Yeah.
And this is the power of consistency. Starbucks always tastes the same. The McDonald's nuggets are always great.
That's true. How has Chipotle not figured out how to just have all the portion sizes be the same regardless?
Listen, they're trading at 61 times earnings. They're feeling themselves. They're getting complacent.
All right. Hey, this is a first for a while, I think, for us.
What is?
Nothing in the real estate section of the doc here today. Does it feel like there's nothing left to say at real estate?
There's nothing to talk
until
about.
something breaks?
There's nothing to talk about.
Yeah. I mean, it feels like the whole worry for everyone is if rates fall, demand will come back in. If rates stay high, demand is going to be on the sidelines for a while. Like, what causes that to break? There's got to be something that changes the dynamic.
Yeah, rates.
I guess that's it.
All right, great chart from Apollo that I found in Michael Sidgmore's Alt Goes Mainstream Substack. Looking at the chart is private equity funds closed by time spent in market. So how quickly were these funds able to raise their money? And Michael says, in 2021, almost 20% of private equity funds, so 2021 was like, go, 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 go as fast as you can.
Right.
Almost 20% of private equity funds closed after less than 6 months in market fundraising. Funds closing in the first quarter of 2024 weren't so lucky. Around 5% of funds were closed. Around 5% of the funds closed were in market for 6 months or less, and only 10% of funds successfully raised in less than 12 months. So it's taking longer for people to give money,
harder.
Which makes sense. The IPO window is still pretty closed. M&A it's coming back, but it's not what it was. And a lot of the deals were a lot of people are still stuck in crappy vintages.
So the people who do the sales for these private equity funds, I've had a lot of experience with these people. I guess you can't call them wholesalers, but it's funny how it works because because I still get emails from these people all the time from my endowment days when we place private equity funds, and they would basically live through like one of these cycles, and it's like sell this whole fund, and then I'm sure they get some sort of bonus depending on how quickly they sell it, and then they move on to another fund. And I still get constant emails of, "Hey Ben, guess what? It's been 24 months since we talked. I'm now at blah, blah, blah fund," some Greek word or island or something. And we are raising a fund that is targeting IR, whatever. But the salespeople, and I'm sure there's cases where people just stay at the same firm all the time, but they have, it's like get this one done and move on, almost like a realtor. But it's been tough for those people.
Yeah, tough market. Okay. Tweet from Kevin Gordon. Consumers feel pretty bad about business conditions over the next 6 months. Worse since September 2011. I'm just reading that saying, what? Okay, whatever. We've been over this many, many, many times.
I'm starting to default to the fact that just no one answers these surveys anymore. That's kind of where I'm falling on them. Because do you get like random text messages or emails about surveys? Do you ever say like, I'm going to take my time out of my day to fill this out?
I think there's some information in here, but certainly not as much as there used to be, for sure. But they feel pretty great about the stock market going up.
Okay. Yeah. Well, I guess
usually these lines mirror each other, right? They're usually going in the same direction.
Yeah.
Odd. Okay. All right, Ben. Ben kicked the hornet's nest, tweeting sarcastically, after my mortgage payment, 401k, 529 IRA contributions, my annual 6-week vacation to Europe, private school for the kids, second home in the Hamptons, a handful of angel investments and country club membership. I basically live paycheck to paycheck. This economy is the worst. I think you're too online. I think you're too online. I think you're too online.
Fair. I've been offline for the whole week almost this week. I got the tropical bros. I'm in vacation mode.
You know why?
Let me ask you. I'm not online this week.
Let me ask you a question. In your real life, have you ever seen anybody, heard anybody come close to speaking this way?
No. The point is, so there was
answer the question in real life, in the real world.
Of course not. That's why this was meant for an online world, because people online were arguing about, someone had made some point like this online about living paycheck to paycheck, but they talked about how they did and so obviously this was satire about people who make these complaints online. And and I had to mute this one because boy, it kind of took off. And do you think the views on Twitter are legit? Because it says this one was kind of a banger. It went pretty viral, but it says 2 million views.
How would you know? I don't know.
It just seems like a made up number to me. I feel like it's there's no way it's real.
We got a bunch of emails. There is a car called, hold on, let me just play this. What's this called?
Behind me is the Ineos Grenadier.
Okay, the Ineos Grenadier. It's a car. I'm guessing this is a European car. It's got a toot horn. Did you watch this video?
No.
So there's the horn where it's like, hey, asshole, move. And then there's the, excuse me, the light is green. Or
like a tap on the shoulder versus
they
a
say it's
punch
for
on the arm?
bikers. So the toot it's a toot. It's a light version of the horn.
I like it.
So we were onto something.
There's your midlife crisis car.
Yeah, it's a good one. We had a phenomenal comment on. I don't know where this comment came from. One of the
This is
podcast
from. I
platforms.
think this is a review on iTunes.
Okay. In
see
every
the start line.
partnership, there is a person who stacks the dishwasher like a Scandinavian architect, and a person who stacks the dishwasher like a raccoon on meth. And Ben is the Scandinavian architect. In fact, you sent me a picture bragging about how it's done, and I got to say that's a great looking load. Yeah,
And I just
that was a great looking load.
That's what she said. I just want I just want it to be known that I didn't like prepare for that dishwasher. I opened my dishwasher and it was full, and I decided to snap a picture for you. So it's not like I was like going all out. That's how my dishwasher usually looks.
Okay. This is all right. This is an unusually heavy email show, so I don't know if you like it, if you don't, but
Personal
another
emails,
email.
personal responses.
here's another email. I just wanted to add my voice to what I'm sure will be plenty of hopefully good-natured ribbing around you guys pronouncing tarot like carrot, delightful. With each new utterance, I giggle with glee. I even rewound to listen to it again. I am generally opposed to haha, you misspoke sorts of commentary, but for some reason this one brought me great joy. I hope I'm not alone. I hope this message does not violate any of Michael's particular electronic email communication protocols. But if it does, please accept my humble apology. No, this is perfect. This is perfect.
I think I've honestly never heard anyone use the word before in conversation.
No,
Like
if you did,
tarot.
you would know how to say it properly. All right, one last one. This was a flyer, a traveler who was going from Edinburgh to JFK, had an unusual airplane experience. This is an etiquette no-no for sure. This one is not debatable. This is not a recliner one. I arrived in my seat to find the person in front of me had draped their coat over the back of their seat from the front of mine. By the way, this happened in Curb Your Enthusiasm this year.
Oh yeah, you're right.
Completely unacceptable.
Yeah, very. Yes.
To the point where the entire seat back, including the tray table and the little tablet, were completely covered by the coat. Are you kidding me? I can't watch a crappy movie because you need to put your coat there? No way. As I only had 3 hours of sleep from the night before, I had no patience for this and politely asked the person if the jacket was theirs. And when getting a positive reply, I handed it to them and asked them to kindly keep it with them in their seat. The person aggressively reclined their seat as soon as we had finished taking off. What's the show stance on draping clothes over the back seat? How could anybody be pro drape?
I think this person handled it right too. Because there's some people that would just throw it on them probably. But I think this person handled it right by, is this yours? Please move it.
Yeah.
That's pretty bad. All right, recommendations. I got a few. Inside Out 2, went to see that with my kids the other day. First time I've been to a movie theater in a while. And delightful movie. Very good. Very original. It was not only a good movie with a good message, like very clever premise.
It was really good. Did
Right.
you fall asleep?
I may have fallen asleep for 10 minutes. My my daughter's like, Dad's asleep.
I fell asleep for 10 minutes too. We're turning into our fathers. It's just inevitable.
But here's the thing. In my more creative days early in the blog, so for those who don't know the premise, it's all of the emotions in your head. So there's joy and embarrassment and sadness and anxiety, and they kind of fight for who has control over your brain. And they should make a stock market version of this. Someone should, right? There should be a stock market Inside Out.
What would it be?
The fear, greed, envy, all these, right? Anyway.
Oh, that is a very, very cheesy blog post that you definitely would have done back in the day.
Fair. So anyway, I really liked Inside Out 2. I think it might have been better than the first one. My kids loved it too. And the funny thing is my 10-year-old totally understands it. And she is a little bit of an anxious kid at times. She's like the safety officer. She's like, this is too risky. We can't do this. And I always tell her like, hey, listen, let joy take the steering wheel instead of anxiety for a while.
Oh, that's cute.
Right?
Was the theater full?
No, we went on like a Tuesday evening. So it was, no one really. How about you?
I find myself falling asleep more often than I used to during.
That's great. But that's because they have the reclining chairs now. It's the recliners that make you want to take a nap.
Yeah. Also, like even during Game of Thrones, but I watch it in bed. I can't. I don't watch TV in bed. It's the only thing I watch in bed. And it's just on Sunday at 10 o'clock, whatever. I'm tired.
That makes sense. All right. I This was on the rewatchables a few weeks ago. I, for some reason, have just never seen it. It just missed my window, like a lot of these older movies. Slapshot. Have you ever
Never
seen
saw it.
Slapshot
Nope.
before? Okay.
Nope.
It was on Netflix. And it's kind of bizarre because Paul Newman was one of my mom's favorite actors. So I'm surprised I've never seen it. If this movie came out in 1985, it probably would have been in my wheelhouse. And I don't want to like crush anyone's nostalgia for this movie because I always get mad at you for saying that all my 1980s movies are suck, basically. But I have the nostalgia from them, so that's why I appreciate them. And you watching them now, you think like, oh, that movie's not that good. I kind of had that with Slapshot a little bit. Where
What
it's
year
like
was this?
79, I think it came out. It was a good movie. Paul Newman was amazing in it, but it was kind of, it had these parts where I would go, oh, that's funny to myself instead of laughing.
Well, guess what?
But if I'd seen it when I was younger.
Hoosiers, not a good movie.
Whoa, okay. Really? See, that's where I draw the line. But I'm sure there's people who Slapshot is literally their favorite sports movie of all time. But just because I missed it the first time, it was pretty good, but it wasn't as funny as I thought it would be. All right, one more. Why is it that people who in TV shows and movies, the women in Chicago all work at art galleries? So I'm watching Presumed Innocent with Jake Gyllenhaal. Wife works,
right?
Right? I mean, it reminds me of the Hugh Grant, Nicole Kidman one a little bit because it's a little soap opera-y, but good.
I love it.
So the wife in that works at an art gallery. They live in Chicago. Dark Matter, Jennifer Connelly, Chicago art gallery.
That's 2.
Jennifer Aniston, The Breakup, Chicago
Ooh.
art gallery.
Okay.
Couldn't find a 4th. 3, that's a trend though.
That's a trend. Yeah, that's
right. Like how many people work in art galleries in Chicago? It can't be that many.
How impressive was the finale of Dark Matter? Like those shows are very difficult to end, especially a show like that.
I told you I went back and read the end of the book while I was watching the show because I couldn't remember how it ended. And yeah, did
they follow the book?
Yes, it was where all the versions of him came back. It was very good.
You mentioned rewatchables. This week they did Naked Gun, which is in my like absolute pantheon of comedies. One of my favorite movies of all time.
See, and the thing is, the sequels are funny too.
They're great. They're really good. Yeah.
To me, they all kind of run together because I watched them so many times. The original, the second one, the third one. Was it 33 and a third?
Yeah.
Yeah. They all kind of run together to me. I feel like they're almost one movie, but yes. Leslie Nielsen was the best. Awesome.
The best. We watched. I showed Kobe and Logan Little Giants, which was a favorite of mine growing up. Holds up wonderfully. Kobe actually said that he liked it better than. Well, we're not done yet, but he said he likes it better than The Sandlot. And I gotta say, what the hell happened to Rick Moranis? I know we know what happened. That he just went away, but he was
another Daniel Stern guy who just walked away.
He was so good.
That doesn't happen today. I feel like that's the thing that could only happen in the 90s.
No, he was so good. My dad, I just was reminded of this. My dad was over. They came back from a trip to Vienna and Austria and that part of Europe. And he was showing me like an instrument that Beethoven used to play, something that could help him hear or whatever. And we were talking about Beethoven for a minute. And my dad goes, "Do you ever see Immortal Beloved?" And I said, "Yeah, with you. You took me to the theater to see that." I'm looking up now. It was 1994. This was definitely not a movie for 9-year-old Michael.
Can't say I ever saw that one.
I vaguely remember it. It's with Gary Oldman.
You saw it right after Field of Dreams.
I did see Field of Dreams in the theater.
Okay. All right. That's your story and you're sticking to it.
When I was 4 years old. It does seem a bit outrageous, but I don't know. Listen, I have memories. Maybe they were incepted into my brain, but I was there.
Vienna is my favorite city in the whole planet. Very nice. All right. Email heavy. We appreciate all the emails here.
Yeah, thank you.
Everyone have a nice 4th of July. What are you doing? Beach?
I'll be at the beach on the 4th, and then over the weekend, we're taking Kobe to see sleepaway camps. He's going next year, so that's what we're doing.
Oh, I got one more anecdote before we go. We're on vacation this week. Did a little horse riding yesterday.
Why'd you just use air quotes?
I did this. Vacation. And we went horse riding with the kids, like a little 2-hour horse ride, just slow walk through a trail in the woods. Nothing.
You ever ride a horse before?
I'm sure I did when I was young. I couldn't really remember it because they asked me that. But it just got me thinking. I was on a horse for maybe an hour and 15 minutes, and I got off and I was sore. Like, it is not comfortable to sit on a saddle. I was not made for like the old times. Like, I think we've talked about this before. You and I would not make it back in the 1800s, Wild West.
You'd make it longer than I would. Let's be honest.
People literally used to ride across the country on horses. I did it for an hour and I was sore. How did they do this for days and days on end?
They died.
Right? I guess so. I guess that's why people died at age 35 back then. But yeah, to your point about luxuries, things are a little simpler now. I can't imagine riding a horse to get around places. No, thank you.
What was the horse etiquette back in the day? Like with fellow travelers. Hey,
that's the thing.
Your horse
They wanted us to ride in a single file line, and my horse Elvis kept wanting to pass the horse in front of me. He was like, "Get out of my way!" And they told me, "No, you can't pass." And I'm like, "He wants to pass.
Yeah.
Let him pass." Anyway, all right. Keep sending those emails. animalspirits@thecompoundnews.com. Thank you for everyone for your views, your likes, your reviews. What else?
The comments.
We appreciate it. See you next time.